Hello, everybody. It's Tortoise Investing coming at you today with 3 dividend stocks that you can buy and hold forever. We're going to be taking a look at these 3: Thermo Fisher Price, Hershey, and Canadian Pacific Railway through Qualtrim Insights. Now, if you are new, please hit that subscribe button, drop a like, comment down below. Doing these things help the channel out a ton, and I greatly appreciate everyone's support. None of this is financial advice. Always do your own research before buying anything. But without further ado, stick with me here. We're going to take a quick look at my portfolio, and then we're going to dive into the stocks you can buy and hold forever. So right here is what we are looking at. The portfolio is up 23% year to date. Absolutely just doing phenomenal. These are my holdings currently. I do have a buy order in the works, as you can see here. Got some Apple, Hershey, and SCHD. The Apple is a dividend reinvestment. I got like 60 cents, so I was like, sure, I'll throw $1 at it. Hershey, dollar cost averaging down, and SCHD, kind of the same thing, a little bit of a DCA. So quickly show you into my holdings tab. This is how everything's looking. Hershey, SCHD, and Extra Space Storage, my bottom 3 positions. Extra Space Storage at one point was over 26% down, and we are almost even with it. That's just awesome. But while I was down, I was dollar cost averaging because it dropped down to close to $100 at one point, and I was just buying all the way down. But without further ado, what chins are here for? The 3 buy and hold forever stocks. So Thermo Fisher Scientific, this one's one I've been seeing a lot in some of your big fund managers. Will be holding this one, and I dove a little bit deeper into it, and it's pretty interesting. It got some great growth with them. Adjusted free cash flow yield 3.63%. Got dividend yield 0.3%. Nothing too big there, but payout ratio 8.85%. So there's a lot of room for growth, a lot of room for share buybacks. You like to see that. Now, at one point, this was over $600 back in January, so it's down to $472. Caught my eye. This was on an even bigger dip down to $440, but I think right now is not a terrible buying in price, not a bad entry price. Revenue's been growing at a rate of 13.64% over the last 10 years. The free cash flow 14.89% over the last 10 years. Very nice. The EPS has been growing at a rate of 18.58% over the last 10 years. They have no debt. Let me take a look at the quarterly, just verify that. Yeah, no debt. Love to see that. The dividend's been increasing at a rate of 15.54% over the last 5 years. They did pause it, it looks like, back from 2013 to 2018, it looks like. It was still 17 cents, but since then, looks like they have been increasing the dividend and at a rapid double-digit rate, which is, again, very nice. Shares outstanding, a little bit here and there, but not too much. It looks like from 2018 to now, it has dropped by, let's see, it's 6, 8, 6, 6, that's 12 million shares. I mean, again, not something that they're too focused on. Let's take a look at the quarterly. Yeah, they're not really doing share buybacks, but they announced a $4 billion stock buyback program. So this is huge. This is what you want your companies to be doing, and they have free cash flow. You want them giving you either bigger dividends or share buybacks. And this is one reason why I'm showcasing this one today. They announced a $4 billion share buyback program. So the share count gonna be dropping. Payout ratio super low. That's fine. Dividend not all that high. Give me those share buybacks. Next up, Hershey. I personally own this one. All because I own it doesn't mean you should. But at one point, Hershey was hovering around 270 plus, dropped below 200. I love this thing at 220 when I got in. I've just been buying it since it's been dropping down. Below 200 is just silly to me. Just free cash flow yield 3.98%. Dividend yield 2.43%. Payout ratio 46%. Revenue's been growing at a rate of 6.75% over the last 5 years, and has been rapid over the last 2 years, double-digit growth. Very nice. Free cash flow 8.27% over the last 10 years. 12.76% over the last 5 years. EPS, 10.6% over the last 10 years. Their debt is $3 billion. Their EBITDA is $2 billion as of last year. My rule of thumb is I don't like companies to have more than 3 times their EBITDA in debt. And Hershey has a beautiful balance sheet. Dividend's been increased at a rate 9.39% over the last 10 years. Right at 15% over the last 2 years. Their hikes have been getting bigger as things are going on, which is super nice. You like to see it, and that payout ratio is still below 50%, so that is a good sign. Share buybacks, they don't do too much, right at 0.9% over the last 10 years, so they kind of nibble at it here and there on dips. And return on capital employed. 2020, this is 19%, 2021, 20.37, and 2022, right at 22%. So very nice ROCE from Hershey. And we didn't look at Thermo's. Above 10. Yeah, usually companies average 9 to 10. This one's above that. This is going to go up once they start buying shares again. Well, once they start buying back shares, this will absolutely skyrocket. So, and last we got Canadian Pacific Railway. They just got done doing a massive acquisition. They now have a rail line from Mexico, United States to Canada. It connects all the way through. At one point, this was over $80, right at 83 a share, down to 71.64. Free cash flow yield 3.28%. We got dividend yield 0.77, payout ratio 23. So all of those are nice. Revenue's been growing at a rate 6% over the last 5 years. Free cash flow though 30%. This company is just crazy with their cash flow. 25% over the last 5 years. Very, very nice. EPS been growing at a rate of 21% over the last 10 years. They have a bit more debt. They did just issue out a bunch more shares for that acquisition, but I think the acquisition's definitely going to help them in the long run. So debt $17.8 billion, EBITDA $5.65 billion. This does break our rule of thumb, but it's such a moat-heavy company, and they're going to be bringing in so much revenue and cash flow with this new acquisition that I am more than confident that they're going to get things under control. Again, not financial advice. Dividend's been increasing at a rate of 7.49% over the last 10 years. I know this seems kind of like it's all over the place, but it's a Canadian stock, so currency conversions is going to make this look silly. And as I stated, they did issue out some more shares to do the acquisition of, I think it's Kansas City Railroad. Yeah, Kansas City Railroad. And lastly, the return on capital employed. Pretty reliably around 12 to 15, but again, they issued out those shares, so it's going to make this dip. But again, I think that's something that's just going to get right back on track. But anyways, there is 3 dividend stocks that you can buy and hold forever. I hope you enjoy that. If you haven't, make sure to go over to the channel, check out some of the other things I've got going on. Hit the like button, comment it up, and until next time, see yous.